Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. In today's video, I want to look at Albemarle Corporations. This is one of the companies that produces lithium. And lithium is right now in demand when it comes especially to EV cars. So these EVs need basically batteries. Those batteries need lithium, and the company that produces majority of that is Albemarle Corporation. So I want to look at the company. I want to see the details of this company. Now, lithium extraction projection in the basically between now and since around 2021 was about basically 500,000. Okay. We're now looking at by 2030, they're expecting about 3 million to 4 million metric tons of these basically lithium extractions, which is absolutely huge when you think about the bigger picture. So 2030, it might seem a very long time. And this is why sometimes you have to look at what is happening, the trend of these companies, and kind of have your own projection of where you think the companies will be in maybe in 5-10 years down the line. And this company is really interesting, and there's so many people out there that are very bullish on the company right now, because in the next couple of years it doesn't seem it actually has a high growth coming up, but by 2030 they're expecting the price to actually triple. So I'm going to look at this company. I'm going to give you the financials. But before we do that, as always, please join us on the Discord if you can, by obviously joining first on the Patreon account, where you can actually just help the channel and you get access to all of these things, including the Sharia compliant basically ebook. And then you can join us on the Discord when you find like-minded people who actually share some ideas and so on. Obviously, I contribute as much as I can, but there are other brothers and sisters that are actually contributing as well on daily basis. So that will be absolutely helpful. Now, one of the things I want to talk about first is just where the company is basically year to date. And that is basically 13% down. But for the 1 year, it's down almost to 40%, which is absolutely huge. But when you look at the 5 years, it's up about 87%. So if you own this company in the last 5 years, right now you would have actually 87% up right now from where you bought it. So I'm going to look at the financials of this company, but it seems really interesting because the company's production and conversion capacity is expected to increase significantly by 2030, and that will allow to capture much more growth in the long run. And a lot of it is because of the lithium that basically is needed to make those batteries for the EV cars. And if EV cars continue to basically obviously it has become a new trend. So you got the Teslas, you got the Neos and so on. This company is definitely going to benefit. They have three basically areas where they do extraction, and that is they've got Chile, they've got United States, and they've got Australia. And what they've done recently is actually bought a company called Liontown Resources, an all-cash deal for about $4.3 billion. And they are expecting this basically to help the company by 2030 reach that basically vision for the 2030, if you like. So basically that is going to increase their basically goal from basically 500,000 to 600,000 metric tons of lithium volumes by 2030. So there's a lot more to come from this company. So I want to look at the financials and see if it's actually cheap or so on. According to Morningstar, they are very bullish on the company. 47% discounted right now. That's a 5-star company. It doesn't have a basically wide economic moat, but that is very, very cheap. Okay, based on the growth that's expected in the basically around 2030. So I'm going to look at the financials now, and then I'll give you my plan, what I would do with this company. Okay, but before we do that, in terms of report that they released recently, that was basically last quarter, it was basically $2.4 billion, and a year, so in comparison to the prior year, it was actually up about 60%. And in terms of EBITDA, for example, it was about 69%. And the outlook is basically for net sales a year on year was about 40 to 55%, which is absolutely huge if you think about moving forward. So you can look at the financials of this company, and when you look at it, it actually looks really good. Apart from the only thing that's down is the net cash flow from operations, and they have a reason why basically that decrease happened. Okay, primarily driven by timings of the energy storage shipment and expected resolution of the DOJ. I'm not sure matter. I'm not sure what that is. That's something. I think that must be something to do with the Chile, because recently there was some situation with Chile that basically Chile might actually do their own digging or whatever. So anyway, I'm gonna go into the financials of this company right now. So there's a lot more information. You can go to the website if you're interested in the company. It definitely seems interesting, especially from the growth side of basically this company, where it should be in the next basically 5 to 10 years. So it's a material company. Albemarle Corporation is the name. $184. Let's call it $185 per share right now. EPS about $33 per share right now, which is absolutely huge. And market cap of basically only $22 billion, less than $22 billion. So it's not a huge company. Okay, like we've seen already, it has narrow economic moat and beta is quite basically high. It's a little bit volatile. Now, let's think about the sector. It's about 14. So the material sectors right now has a PE of 14, and the S&P 500 currently trading about 23. This company has only 5.57 PE right now, and the forward PE is less than 7. The 5-year average though is about 25. Let's call it about 26. So according to the 5-year average, this is really, really cheap. Price to free cash flow is about 22, and PEG ratio is 0.4. Less than a 1. That's basically very, very cheap. But again, this is not your technology high growth whatever, but it's not that bad either when it comes to that growth side of it. This company has a dividend, to be honest, and is a dividend aristocrat, which is absolutely amazing. But it is actually quite low in terms of dividends. But the 5-year payout ratio, is only 5%, which is really good. Latest increase was only 1.3. That's fine. The 5-year growth rate of 4%, and then the annual payout is $1.60 basically for every share you own. Safety is 99%, and they have closer to $1 billion of free cash flow, which is good. I think that's an increase from when I did an analysis on this company last time. Free cash flow yield right now we're looking about 4.4, which normally is higher than what we're looking for, and free cash flow margin of 10%, again, which is higher than what we're looking for. Profitability side of it, 40% profit margin, operating margin is 30%, return on equity 46%, total return in the last 10 years we're looking at about 12%, return on invested capital 18%, the 5-year growth rate in terms of revenue we're looking about the compounded annual growth rate of 23%, and current ratio is about way above 1. So in terms of this side of things, is absolutely amazing when you look at this company. It really looks really solid. Although the past does not tell us what might happen in the future, it is good to know that basically it had a total return of 12%. That's obviously beating the market every single year. So if you get 12% return every single year on your investment, that's absolutely amazing. That's better than what you would get on the S&P 500. Now they're expecting the earnings to have basically decline next year, but then the year after that they're saying it's about 3%. Now let me show you. Let me basically go to earnings, seeking alpha, and go to earnings, and then go to estimates. So now in terms of earnings, you can see base 2023 this year, obviously they're basically expecting a bit of growth, almost 22%, then about 10% decline, 1%, and then 9% after that, basically positive, and then 177% after that. So it's about 2026, 2027 where it becomes a positive again, from basically where it is right now, literally is where it is right now, to almost basically 72 per share, which is absolutely huge in terms of growth side, 177. And although it's only one person basically analyzed saying that, but it looks like it's quite synonymous when it comes to these. There's a lot of analysts that agree with this, okay? And now 10 billion of basically revenue, and to basically about 16 billion. So it's about 10 for a few years, and then it jumps from 12.5 to about $16 billion, which is huge. Again, there's not a lot of people looking at this, but that is very, very interesting, basically moving forward. Now let's go back here, and then in terms of price wise, in terms of valuation, now right now we're looking at a Morningstar. We've already seen $350 per share. That's 47% discount right now. According to Simply Wall Street, it's $1,000 stock according to them, 82% undervalued right now as we speak, which is absolutely huge. According to Seeking Alpha as well as Tip Rank, both of them 44% upside from where it is right now, 266, and both of them are saying one is a buy, the other one a moderate buy. So in terms of valuation side of it from these analysts, remember these two are using intrinsic values, and these two are basically kind of using analyst expected basically with prediction prices, and they kind of averaging that out. So when you look at this is really, really interesting. The growth might not be there right now, but 2030, by the time we get to 2026, all the way to 2030, this basically company is going to double its basically earnings and so on. Sharia compliance side of things, we're looking at about 100% in terms of business activity screen. In terms of interest-bearing debt, well, about 14%, and interest-bearing securities is about 6%. Now, in terms of shares by basically outstanding, I don't talk about this a lot, but it's really important because you don't want a company that dilutes you, basically your shares, which means if you own a share of this company and all of a sudden they issue more shares, then your share is worth less. But if they buy back, then your share is worth more. That's the only reason we basically look at this. And we like companies that buy back their own shares when it's basically cheap, not when it's expensive, because obviously that's waste of money, right? But this company had it up, up and down. So from this to this, so it looks like it came down again for a bit, and then it went back up again in 2021, and then it might be because they acquired another business they actually needed some to finance. And last 2 years and this year and basically next year, they expected it to be flat, and hopefully they all start buying back their own shares. I'll be honest with you, I wouldn't want this company to pay any dividends, probably buy back more shares and basically grow the business as well. That's the kind of thing I would have done. But and just looking at the revenue growth side of things from basically 2018, where they had $3.3 billion to right now $7.3 billion. So it's quite basically massive jump. And the next year from 7 to 10, and then basically 10, which we've already seen. And then same goes obviously for EPS, which we've already seen. If you take out the estimates, you can see the massive growth of this company. That's why it was so overvalued, because if the stock at one point, if we go back here, at one point basically was trading about $325 per share, whatever it was, and it has come down. And this was 2022. In fact, 2021, it must be actually more than that. If I go back 5 years and go to around 2020, actually no, 2022 is when it hit its all-time high, which was basically $334 per share. So yeah, according to basically Seeking Alpha analyst as well as the Wall Street analyst, basically they're saying is a buy. It seems really interesting. From business side of it, is actually really, really interesting position right now. And I like the fact that they have acquired this new business, that the Lion basically Town Resources recently, and we will see what happens in 2030. So if you own a stock already, well done to you. If you don't own it, obviously something to look at. Okay, I'm not saying go away and buy it, but personally I don't own it in this portfolio, but I do own it in the family portfolio. I think I shared that on the Discord a while ago. I own, I think, about 3 shares or so on basically of this company. It has come down a lot since. So inshallah, this month when I get paid, I'm planning to add a little bit more. Again, I'm taking a bit of a risk because that portfolio is for my children and the family, and I'm not really thinking about the base short term. I'm thinking about maybe 10 years from now kind of thing, and hopefully by 2030 basically this company will be actually worth a lot more than it is right now. And again, it's a bit of a risk. All these investments are a bit of a risk, but I'm willing to take that little bit of risk. Not a lot, because what I'm going to try to do is limit it maybe 2% to 3% of that portfolio, inshallah, and then see what happens in the long run. Collect that dividend and reinvest that, and if the price goes up by then, and we will see what happens. But yeah, that's the video that I want to share with you guys. If you haven't joined us in the Discord, really please do so, because it does really help the channel obviously grow it and basically reach out more brothers and sisters. The portfolio is doing okay. I've been paid quite a lot of dividends today. I'll share that on the Discord today as well. It's been good day to get paid from 3 a.m. And another 2 companies actually paid me. I think about got £50 or so today, and then I've actually added that to, I think I bought more AstraZeneca today. There we go. I bought more AstraZeneca today. I haven't included it in the pie. Yeah, you can find the pie that I basically, this pie here. Okay, you can find that on the description section, and also the link to the Discord will be also there. Have a wonderful day. Assalamu Alaikum.